All right. Those of you that bought the new book, like I said, get the full analysis, the full video, the full review of this 135-page book here that I finally got done typing. And so I appreciate each and every one of you that purchased this book. And I can't wait to publish this book, like coming out in hard copy. So I appreciate all you guys that's been supporting me, that's been a part of this. Shut this off. Okay, that's been a part of this journey with me. And so, but let's dive down to the second edition of the QE FX book here. And I want to share this on the video, sharing the screen, so you guys can have a full analysis of how I trade and how this whole experience is come. And so it's just a true blessing and a really great journey where things are going from last year and up until now. And so there's more stuff to come. And so let's just go ahead and dive in here and talk about the book here. And that's the biggest thing right now. So you guys can see the book. And let's see here. I am going to jump into scalping, swinging, pretty much everything. Let's see what else I'm going to jump into. I'll try and jump into every single major chapter, but the most important thing is scalping and swinging, so that you can understand the basics, and then the fundamentals, technical, and then where I am going right now into trading. And so I'm going to be hopping from different things, but I want to be able to guide you guys through here. With scalping, basically, like I said, you can find videos on scalping on YouTube. And, what I was taught was to scalp off the RSI using 70 and 30. You don't have to use the relative strength index. That's what's called the relative strength index. And your target is 5, 10, 15 pips on the 1 minute chart. That's what I was taught back then. Now, when you're catching, I don't recommend trying to shoot for 10, 15 pips, because most of the time you won't get it. But if you shoot for 3 to 5 pips first, then you'll get to see, your short-term profit, your short-term gains, and that way you can, you don't have to be scrambling around trying to catch 10 to 15 pips. Because your overall goal for scalping is to try to catch short-term profit, but using higher lot size. That's how I look at scalping. Short-term profit using higher lot sizes. Without that, you won't be able to cover the spreads and the commissions off any broker. Your two best pairs to scalp is USD/JPY, the US dollar to the Japanese yen, and Euro USD, or you call it Euro, the Euro to the dollar. I like scalping USD/JPY because it is by far a better pair to scalp. It's only 3 digits in the front and 3 digits in the back, so it's easier to read price levels and price action on it. With the euro is really not active during Tokyo. You're like, the reason why I like USD/JPY, it has the US dollar in the front and it involves New York session times, and then the Japanese yen is involved during Asian sessions. And then during London, it's still a volatile pair. So you catch a lot more pips and more money trading, scalping the USD/JPY pair versus using trying to trade or scalp Euro USD. And so with the RSI, you're bouncing up 70 and 30, and 70 is an indication that it's overbought. Then you would sell it, and if it hits 30, then you would buy it, because it's going to bounce off at 30. Now, does that mean it's going to happen all the time? No. And so you have to understand that by using the RSI, that you should not rely on the RSI all the time. So for me, for scalping back then, from January and up until April and like the end of May, I was using RSI, MACD, and moving average. Those are the only three indicators I was using. And then using the 1 minute chart, and you can see the MACD is more trusted indicator on scalping when RSI was mid-ranging from 40 to 50. So reason why I say the MACD is a little bit more reliable is because the MACD takes forever to make that curve. When it goes above 70, and then when it finally curves, it's like pretty much almost touching 80, and then it curves down. You can use it for the 5 minute. I've done it for the 5 minute. 15 minute takes time, but then it can also curve and then curve even higher or curve lower. And so that's the only problem using the 15-minute chart. Because if you use the 15-minute chart, then you should already try to identify a trend, which is pretty crucial, especially when you're using all these three indicators. Because if the candlesticks are above what I was using back then was the 10-day moving average. If the candlesticks are above the 10-day, then basically you should just end up following the uptrend. If the candlesticks are below the 10-day and you're hopping into the 15-minute chart, then obviously you can follow the downtrend. And so I want to hop in here. Let's see here. Following candles is pretty important. Make sure candles are going up and down. Yeah. Please make sure that that your primary indicator that you follow is set, so you don't get confused on following too many things at once. It's very true, because I had a bunch of indicators and I started adding more indicators and I didn't know which one I was going to follow. You're going to have to precisely look at for yourself, and you're going to have to identify that if you're going to follow the RSI, make sure that you have some kind of price reading or candlestick structure reading on looking at the main window. If you don't, I would suggest putting two moving averages, because even with one moving average, it gets kind of what people try to do is when they tie into two moving averages, when they cross over, then you get to see the full benefit. I'll explain that a little bit more. And so with this chart here is the Euro USD on the 1 minute, and this chart was, I won't say when it was back then, but this is a pretty, I think this chart was early summer. What I want to highlight here is that high, all right, these almost matched up, right? This pretty much matched up, but you can clearly see, that the trend is going, down. Okay. So you can see that for yourself, how far it's been going down here. And if you are following RSI, you're gonna get yourself caught, because what I mean by that is that if you're following this, or you're following the overbought and oversold conditions, and if you're not following the candlestick structure, you're not reading candlestick structure and not reading the price, because the candlestick structure is going to create that trend. That's the most important thing. And so if you see the trend, then just hop into the 15-minute. That is the most important aspect of looking at the trend. Your candlesticks are going to create that trend, and then you're going to see the price going down or going up. So that's the most important thing. I'm talking a lot about candlestick structure and price, pretty much price action, is because that's what I'm focusing on, and I'm into negative forex right now. And so I'm going to hop into these important chapters here for you guys. Let's see here. I noticed that the 1 minute chart for Euro, I have a 10-day moving average. I look at the 1 minute. Based on what you see, the RSI is the middle, close to 55, 70 is considered overbought, and 30 is considered oversold. Next thing is looking at the last candle, which is a bull candle, green candle. This is letting me know that I'd be buying a position instead of selling. Now, this is if I was scalping. This is if I was scalping. So back to this chart here, I would be, you would have bought it here, and it's still trying to shoot up. But overall, it was downtrend, and so I wouldn't be wasting my time if I saw this. But based on the 1 minute, if you were just scalping out the 1 minute, then you can very well just do, you're just trying to get in and out all the time. And so I scalped 6 to 8 hours before, and it can get very, very confusing and stressful sometimes. And so when you're scalping for that long, you have to understand that not all entries are going to be perfect. That's fair, and you have to practice for yourself. You have to keep practicing until you find those good entries, and then you understand when you want to enter and when you want to take profit. Most important thing. The number one thing is to understand when you want to enter, and then the second thing is to understand of taking profit, and then the third thing would be is, okay, when's the next time I'm going to enter again? Your entry points are the most important thing, especially when it comes to scalping. And your swinging is different. You can miss the swing trade, but then if you catch the trend later, you're going to catch it. So, just giving you guys a little tip there. I don't want to run through the whole content. I want to run through all the charts because I want to make sure that you guys are not getting confused by looking at the chart and be like, oh, what is Ku exactly trying to explain here on this chart? Even though I typed it all down here. With this, you can see the downtrend for USD/JPY. We know that the top resistance price is 109.6, and it went all the way down to 109.34 here. And then you can see the retracement here, but we know that it cannot break this resistance here. We can see the double resistance here. And it shot down pretty hard. Anytime it creates a double resistance, especially where it's a 1 minute, 5 minute, 15 minute, to me, you're just looking to me, that's a double top. It's not like the strongest double top because it's just a 1 minute chart, but it's already letting you know that how much it's going to go down, and that it's going to create that price resistance at 109.44, and it's shooting back down, and it shot back down to 109.34. You trace back up right away. That's the problem. When it shoots down really fast, USD/JPY is going to retrace back a lot. And so you can see the massive retracement here, and then it's like a 4 pip retracement, and then 4 pip, pretty much almost a 5 pip drop, and then a 4 pip retracement, and then you can see that it's trying to come back, but I'm still selling. And so very interesting to see, where that you can outline all this resistance, and you just put horizontal lines on. I wouldn't just put like a bunch of horizontal lines on there, because then you're just gonna get confused and looking at every single horizontal line. But you always want to highlight that high price initial target where it fell off. And if you like to use trend lines, you can. And by drawing your line down here, you can see how much it's going down anyways. So very, very important to see the structure of candlesticks. And this is strictly no indicators. And so how do you identify that is a sell based off no indicators? Is if you're not, like I said, if you're not for sure, put a 0.01 sell and a 0.01 buy right away at the top. You'll get to see your direction and the fluctuation of price. And then you get to see whether your sell position is making money, or you get to see whether your buy position is making money. This is one way of hedging, and it's the easiest way of hedging because in that way you have a clear path and a clear confirmation that, okay, if your sell position is making this much money, and how do you determine how much money before you confirm, right? If it drops more than 25 cents, obviously, I mean, if you're making 25 cents or more, I mean, that's 25 micro pips that you're making. If you did it one standard, both ways, that's $25 each way. So with the micro pip, with the micro pips and the micro lot, you can see that 0.01 lot size, and that 0.01 lot size is making 25 cents or more. But I always try and go off the, 50 cents in profit or more because it's a little bit more safer. But with 25 cents, I want to get in them right away because I want to catch that. So it's really aggressive trading. And you catch that position right away, then you start stacking. Like here, I would start stacking. I would restack here again and then add another position here. And then I would sit tight. And like I said, I would wait, because usually after the third leg or the fourth leg going down, especially on the 1 minute chart, you can see the first leg down, second leg down, third leg down, and the fourth leg down. And you can see that it came back to the same resistance. So there is no point stacking. Now if it keeps dropping, then yes, we keep stacking it. And so that is one way of stacking. Like I said, I'm hopping to different subjects, so that's one way of stacking and being really, really aggressive trading, and then catching more money and compounding your profits. So that's very unique technique there, and that's what I was doing back then. I still do it today, and you compound. Like instead of doing a 0.01, stack some 0.05s and one mini lot, like a 0.10. And then you'll compound your profit for every micro pip that it goes down. So it's very cool to see that. Some people call it legging or pyramiding, but with that, then you put your stop loss after a new trade is entered. Now I don't use stop loss when I'm stacking, or I don't use stop loss when I'm scalping, stacking, or swinging, any or even news trading. And so you build that kind of confidence along the way when you get better at your trading techniques, and then when you diversify your methods and your strategies, and you figure out, okay, you're going to balance in between where your weaknesses are, because when you find your medium, that's where it all ties into your balance of trading. That's what it comes down to. So, well, let's dive into. Yep, it says Noah does photo trading view, no indicators. Currently downtrend 1 minute chart. There are no indicators in this chart. By using this chart, you're basically looking at price action candlestick structure to follow the next trend. Advanced scalping method. Let's talk about advanced scalping. Because with advanced scalping, there's so many ways to diversify your scalping methods and your techniques. And so, like here, I'm talking about the Bollinger Bands with the stochastic, and on this chart here, notice that this is the same exact chart from the previous one, except I put the Bollinger Bands on and I put the stochastic on. Same exact chart, just that this has indicators from the previous, the naked chart. Why am I still selling? You can clearly see Bollinger Bands has just been going down with the trend, right? And then all of a sudden it's peaking back up, right? But you can see stochastic is already overbought at this level, at this price. And guess where it's gonna go? It's gonna shoot down. So if it's going to shoot down, then there's no point in buying it. I mean, yeah, you could have bought it. You could have bought it here if you were following stochastic. You could have bought it here. That was the best time to buy it, and then let it ride up, because it always does this massive pullback. And then you can see the initial, I mean, you can see the double top here, then you can see it came back again, pretty much same resistance, and then just now it's going to tumble back down, which it did if you went back and look at the same chart here. And so that, I believe this chart was back in May, if not April. And so you can go back and take a look at this. And it's important because when you see the downtrend structure on the 1 minute, hop into the 15 minute. If you don't want to hop into the 15 minute, hop into the 5 minutes so you can see the structure. Because you have to see that, you have to identify the structure of the trend. If you don't identify the structure of the trend, then you're not going to know where the trend's going to go. We all know that either it creates an uptrend or a downtrend. If it consolidates, there's no point trying to find a trend, and there's no point scalping. I don't scalp when it consolidates. And when you're trying to swing when it consolidates, what you're trying to find out is the breakout. That's all you're looking for. When it consolidates, you're looking for a breakout. You have to look for the breakout. The breakout's going to let you know where it's going to push. If it breaks out going up, you would buy it. If it breaks out going down, you're going to sell it. When it does a massive breakout, it's going to do a massive pullback, a retracement on the wick. So you have to remember that. So same chart just as the previous, but I mean, you can clearly see that I would still sell. I wouldn't be buying anyways, based on if you're using indicators. Let's see here, 15-minute chart. This is strictly, there's no, oh yeah, there's a 10-day SMA and then a stochastic. So what you see here, okay, I'll show you guys. What you see here is I outline support here at 109.25, and I outline resistance here at pretty much 110.050. So from here, you're looking at the trend, right? Basically, it's already consolidating here, and it wants to push back up higher. But realistically, we are looking at a downtrend. So you wouldn't be, like I said, you wouldn't be trying to waste your time trying to buy it, because you can see how much it's just sitting here and it's not pushing any higher. So you would just wait until it's done trying to retrace back up. If it doesn't clear a path to show you that it's going to break higher, then it's going to break lower. And that's the most important thing, especially on the 15-minute chart trend. And so it's very important to understand that when you hop into the 1 minute to 15 minute, is that you want to catch the trend as soon as possible, so that you don't get caught up on trying to scalp for the next 4 hours, or for the next session, or for the next, or for the next hour, whatever it is. Because you're going to make more money catching on the trend and stacking trades on the trend. So that's what you want to do. And I'll talk about that when we get into the swinging chapter. Yep, notice I highlight the red line, resistance price. I don't want to dive in too much on what I typed out, because it's basically just states what. I don't want to repeat talking about the same thing. I want to show you guys these. I want to talk about the charts, because the most important thing is talking about the charts. So here, this was, I believe, okay, so this was July 23rd. So this chart was almost 3 weeks ago. So this chart was almost 3 weeks ago. It has been consolidating, and this is the initial resistance, because here is where it fell off. Never came to break higher 111.5, so it dropped again. So that I was looking to see if it was going to test break this. This was the lowest price of the day. This was a Monday's price. Can it come test lower? Never came to test lower. So guess what it's going to do? Try and retest higher. Came back here, shot back down again, came back again, but never broke higher. Notice that it never came back to previous highs, and it's still going down. Right now, USDJPY is under 111. It's at 110. Let's look at it. It's at 110.9 right now, and it's August 8th. So clearly, I'm looking for a strong downtrend for USDJPY for the end of the year. Well, till the end of the year. And then we'll see if what I'm looking for is to retouch 104, 101, and 98 long term. So you guys have a little heads up on what I see coming up here. Let's jump into swinging. Swinging. I mean, by far, once you get good at scalping, learn to swing. You can see why I talk about swinging a lot and having patience in trading. Because when you get good at swinging, you can identify longer term trends, like really long term trends, like weekly charts, monthly charts, 6 months out, year out, 2 years out, 4 years out, and then you get to see, and then you get to draw your future trends and future price projections. That's pretty important chapter 2, because you want to be able to find out. Oh, hang on. All right. Let's get back to swinging here. By far the best chart for swinging for me is the 4-hour chart. The reason being is because every 4 hours you get a new candle. And by looking at tradingview.com, it counts down. And so it's very important because by using the 4-hour chart, you get 6 4-hour candles. So 6 times 4 is 24 hours in a day. And that way you get to see the structure of 6 4-hour candles, either going up or going down. And so it's pretty precise and a little bit more accurate versus using the daily or the weekly or the monthly. With the 1 hour, it gets kind of tricky because then you're hopping on pretty much almost every other 1 hour candle is like a retracement candle. So that's why it gets confusing using the 1 hour candle. Now, with this basic way of looking at it is you want to start on the 30-minute chart and the 1 hour chart so that you get familiar by looking at the trend. Because when you're scalping from the 1 minute and then you're hopping into the 15 because that's what I was talking about scalping. Because if you hop from the 1 minute to the 15-minute, then you get to see a little bit easier on price structure, candlestick structure, and where the trend is going, because that's the most important thing. And with the 30-minute and the 1 hour, they're just sitting in between, and they're only half an hour apart, but at least you can start swinging on those time frames so that you get familiar with it, and then work your way up to the 4 hour and daily. Because with the 4 hour and switching to the daily, with the daily, you're pretty much stuck on that one candle for the daily chart. You're stuck on that daily candle until the closing of New York sessions. When New York closes, then you get the it starts a brand new daily candle. And then from Tokyo and up until London, right? Because Tokyo, you want to capture that direction so you can let it ride all night, or swing it throughout the whole night, all the way to London, and then wait till New York again, and to see where New York's going to go. And so usually whatever happens during New York ends up being the opposite direction, or ends up being a retracement candle based on the 4 hour. Because if they were sending the position up for an 8 hours from the beginning of New York into the whole closing of New York, that's a full 8 hour session, then you have to look at and see, okay, if it went up this much, like a 50 pip gain or 100 pip gain or 250 pip gain in one session, you have to expect for it to lose 40 to 50 pips. And so I'm not saying that's the most It happens all the time. But if USDJPY was to just rally up all day during the day, and then you have to expect for it to pull back at night for Tokyo. And so that's the most important thing. And if it's going to drop back for Asian sessions, then it's going to try and rally back up for London sessions. And then because London drives into New York, and so London will carry on into New York, and then New York's going to carry whatever London is doing most of the time. So that's another way of swinging and looking into each different session, so you don't get confused. And let me touch base here. Like I see times to look for at the 4-hour candle. If you're on Central Time like I am, 4 p.m., 8 p.m., 12 a.m., 4 a.m., 8 a.m. On TradingView, it already has it already set on the currencies, and that way you can see that on every 4 hours that you get a brand new 4-hour candle, 4-hour intervals. You can say that, and then since I'm on Central Time, those are the times I'll be looking at. If you're on Eastern Time, you're looking at 5 p.m., 9 p.m., 9 p.m., and 1 in the morning, 5 in the morning, and 9 in the morning. And then you're constantly shifting, every 4 hours for the new 4-hour candle, either to keep, closing above on the uptrend or closing below on the downtrend. But yeah, start with the 30-minute chart. If you're not really that great at swinging, start at the 30-minute chart or work at the 1-hour chart, and slowly look at the closing of the candles, and look and see how much more it's going to go in further on the uptrend or on the downtrend. And I'm not talking about RSI or MACD or stochastic. I'm talking about like the structure of the candlestick structure of the candles closing every single 30 minutes or every single hour or every 4 hours or even every single day on the daily chart. And that way you can get a look at and say, okay, how much more is it going to keep going? If this is the resistance, then it's going to come back down. And if it's going to break support, then it's going to create a downtrend. So that's the most important thing we will take a look at. Let's see here. When you're swinging, and this is the advanced mode. Oh, hang on. All right, advanced. Let's get back into advanced swinging here. And let's share the book. So with this, every 4 hours, I'm talking about every 4 hours. I'm talking about the 4-hour chart, because when you get a little bit more familiar with the 4-hour chart, then you get to see, where candlesticks are going, and they create the trend. So I'm going to be a little bit repetitive, on this chapter, and I'm going to be talking about pretty much the same stuff. So I'm going to be reiterating a lot of the same thing, and because I want you to dive down, get into my mindset, and get into the way I think into the markets, into trading Forex, because the ultimate goal is to not just like become me, but to become better and to get more familiar with my strategies and my methods and my techniques, and then find your solution within that. You're not going to be able to like hop in and be like, oh, I'm going to, test every single strategy that's given in this book. I mean, you can if you want to, but eventually you want to find your strengths, and you want to keep your strengths in trading, so you're not losing money all the time. And so I always recommend people to focus on their weaknesses or what they're lacking on the weekends, because you don't really need to trade on a Sunday, but you can if you want to. And by rereading and reevaluating of your methods and your strategies and your techniques, then you can be like, oh, this is why I lost money on that day, and I'm going to refocus on this particular time frame, or why I lost a lot of money on New York sessions. And so, but let's dive back into swinging here. 4-hour chart. Now, I don't use any of these indicators anymore, but if you want to, you can. You can use the moving average, which is the 10 simple moving average. It's on the default settings on the MT4 mobile app. If you put the moving average on TradingView, it's your 9-day simple moving average. So I don't know why they have it set for the 9-day, but they have it set on 9-day. You can put the Bollinger Bands if you want. Remember, your middle band is your 20-day moving period, so remember that. Your parabolic SAR, if you want to use the dots, fractals, RSI, MACD, stochastic, momentum. Momentum is a pretty interesting indicator. I liked it a lot using with RSI because when it shifts the opposite way of RSI, that's like my way of looking at, okay, that's my way of, like, if RSI is still pointing up, but then it's shifting going down. So then it's following more on the candles that are pushing down. And so that's what I like about the momentum indicator. But like I said, when you get into negative forex, you don't utilize any of this stuff. And so, but if you, like I said, back into the advanced swinging mode with all these indicators, I mean, it just gets confusing. I'll just be honest, it just gets confusing. You're looking at so many different things, so many different indications of buying and selling, and you can just strictly just go out Bollinger Bands and stochastic, or just using stochastic by itself, or using RSI by itself, or just using just one of these indicators. And like I said, this is a revised book, so that way you guys are not confused and be like, well, Ku's old book, he talked about, all these indicators, but he said he's not using it anymore. I'm not. And so that's why I don't want to dive in too much of this, because this is strictly what I was doing before. I mean, like I said, advance into swing trading can be difficult first, but first pre-analyze in an hour before. You have to look an hour before the new session starts. You have to. Why I say this, because if let's just say if Euro USD has been uptrending during New York sessions for the whole session of New York, for me, I would get ready to short it on the retracement going down. And then predetermine based on looking at the new daily candle and the new 4-hour candle at the end of New York. When Tokyo comes in, you want to start looking for a direction after the second hour. Not the first hour, the second hour. Every first hour of each session, you're going to face retracements and high impact news, regardless of the session. So you have to predetermine those economic news events, the first hour retracements, but after that, the second hour, you have to look for that direction. The second hour, if not the second hour, look at the third hour. You have to catch that trend for the whole session, right? Once it finds a direction, then you just stick to the direction. Now, there's going to be days where it just consolidates in the session, where it doesn't do anything, like a holiday, or if there's not a whole lot of economic news coming out on that one session. It's usually during Tokyo. And so you don't want to get too caught up on consolidation or any kind of tight, narrow price ranges. And if you're trying to swing, I wouldn't recommend swinging on those times. Holidays, don't do it. Tight price actions, don't do it when the price is too narrow, when it's just consolidating all day or all night. There's no point swinging. And so you're not going to get anything, because when it consolidates, you have to look for a breakout. That's the most important thing. So if you don't, then you're going to miss. You're going to miss the action, and you're going to miss the next sequence or the next following trend, where it could be breaking to the upside or breaking to the downside. So that's the most important thing. New York sessions is the beginning of a new session, not London. The reason why I say this because I always look at New York's highest price of the day and lowest price of the day. And so that determines already my highs, daily highs and daily lows. I don't determine my daily highs and daily lows off of London. So I always determine daily highs and daily lows off of New York, always New York. So very important. Always running New York sessions will start a new day since everything revolves around the U.S. markets and the U.S. dollar index, which is very true. So always pay attention to that. Let's see here. You don't want to set a stop loss to have a mental stop. And it's very important because when you're swinging for that long, you have to expect retracements all the time. If you're swinging any trade for more than at least 2 hours, you're gonna see a little bit of retracement. But by looking at the longer time, higher time frame, right? Especially the 4 hour, you're gonna be like, okay, well, I see the trend is starting. For the next 4 hours, we're gonna see this candle going to be a bull candle on the uptrend. It's gonna close as a bull candle, right? It's gonna close as a bull candle, and then it's gonna bully up again on the next 4 hour candle. And then maybe on the third candle, the next, the third 4 hour candle could be a retracement going back down. So that's one way of looking at it and predetermining where these candles are going to go and where they're going to, when they close, and then when they reopen again every 4 hours. So the 4 hour chart is pretty important. And then by having that, by not setting a stop loss and using a mental stop, is that you're building your mindset and your confidence so that you don't have to just keep setting a stop loss on your swing trades. Eventually you're going to get out of that and you can be like, okay, I'm more confident on my trades so I can let these trades, sit in profit and make more profit. I'm not saying get greedy and then just let it sit throughout the whole day and all night and all week. No, there are going to be days where you can do a full weekly swing with no stop loss. There is. There's going to be a week like that. There's going to be weeks like, especially in the summertime, where you can't really swing, but you can still swing for either the whole session or maybe for 2-3 hours. And then you just have to, though I wouldn't suggest looking at the 4 hour chart anymore, you would have to bump down to the 30-minute or the 1 hour, or maybe the 15-minute if it's just consolidating, up and down on a 100 pip range or on a 50 pip range. So very interesting to not put yourself and just be like, oh, I'm going to try and swing this throughout the whole day. It's not going to work out, not every day like that. Because you're going to get, hit pretty hard if you say, oh, I'm not going to set a stop loss and I'm going to ride this trade out based on daily chart or based on the 4 hour, and then all of a sudden you see a bunch of retracements during New York sessions, and you don't know what to do anymore because you don't see a direction anymore. And so it's very important to not get caught up on like that. So, all right, we are back at it again.